a nation divided by money. It began with a truth too uncomfortable to ignore. The country wasn't just split by geography or politics, but by the very meaning of money itself. Two visions of America, each convinced it was right, stood on opposite sides of a financial fault line that grew wider every year. To understand why this divide still echoes today, we need to return to an era when the nation was expanding but not united, rich in ambition but poor in agreement. Every region had its own priorities, every industry its own demands, and every community its own fears about who controlled the flow of credit, currency, and opportunity. Money wasn't simply a tool. It was a battleground shaped by ideology, identity, and power. In the industrial North, bankers and merchants insisted the country needed a strong central system, uniform currency, reliable credit, and rules that could support railroads, factories, and the growing machinery of commerce. In the agrarian South and the frontier West, people saw such ideas as a threat to their independence. They feared that centralized control would tilt the scales toward wealthy cities, leaving farmers in small towns at the mercy of distant institutions that didn't understand their lives. The divide deepened as the economy grew more complex. Banks in different states issued their own notes. Some were stable. Others were barely worth the paper they were printed on. Traveling with money became a gamble. A dollar from one region might be accepted at full value, or rejected entirely, just a few miles away. Confidence depended not on the nation, but on the reputation of local banks struggling to stay afloat. Then came a new financial proposal, one that promised order and unity. Supporters saw it as progress. Opponents saw it as control. The very mention of it sparked debates in taverns, legislative halls, and newspaper columns. People who had never thought deeply about banking suddenly cared passionately, because beneath all the technical language was a simple, personal fear. Who gets to decide the fate of my future? The early beats of the conflict emerged slowly at first. A speech here, a protest there. Politicians aligned themselves with competing economic visions, their loyalties shaped by the needs of their regions. The financial divide began to mirror every cultural and political tension in the country, fusing them into a single question that grew heavier with each passing year. Was America meant to be a nation bound together by one financial system, or a collection of states free to forge their own destinies? That question didn't just haunt the economy. It shaped the identity of a nation itself. The divide sharpened as the nation grew busier, louder, and more uncertain. What had once been polite disagreement turned into something far more entrenched. Every new policy proposal, every shift in the economy became a spark that widened the fracture. And underneath the political speeches and economic arguments lay a deeper, more emotional tension. Each side feared being ruled by the other. Northern merchants and industrialists pushed for stronger financial coordination. They believed the future lay in a unified economy powered by factories, trade, and credit that flowed smoothly across state lines. To them, a fragmented system wasn't just inefficient. It was dangerous. Every unstable banknote, every delayed payment, every regional panic threatened to derail the progress they worked tirelessly to build. But to many in the South and West, these arguments sounded like a plan to centralize power in distant cities. They remembered years of hardship under fluctuating crop prices, predatory lending, and policies crafted by lawmakers who had never stepped onto a farm or frontier town. They didn't see a unified system as protection. They saw it as domination, a method for wealthy interests to tighten their grip on the nation's money. Meanwhile, the currency chaos worsened. Travelers carried pamphlets listing the value of different banknotes, updating them as often as merchants changed their prices. Some notes were worth 90 cents on the dollar. Others were worth nothing at all. Counterfeiters thrived in confusion. Honest businesses suffered. And ordinary citizens grew weary of a system that demanded constant vigilance just to buy and sell basic goods. Behind closed doors, political alliances shifted with each financial dispute. Legislators from certain states banded together to support local banking autonomy. Others pushed for sweeping reforms that promised uniformity. Each side saw the other as a threat to the nation's future. Every compromise seemed temporary. Every concession planted seeds for the next round of conflict. The tension seeped into daily life. Newspapers framed economic debates as moral battles. Ministers delivered sermons warning that one vision of finance would corrupt the nation, while the other would save it. Even families found themselves divided. Brothers arguing over the future of currency, fathers and sons clashing over the meaning of economic freedom. And beneath all the shouting, a greater fear took root. What if the nation's financial divide was becoming too wide to bridge? As distrust mounted, the conflict's early shape became unmistakable. Supporters of a unified system believed chaos would continue until order was imposed. Advocates of state control believed unity would destroy their independence. Each side believed the other was pushing the country toward ruin, and neither was willing to back down. The conflict soon reached a point where diplomacy no longer mattered. The divide over money had grown so deep, so emotional, that every attempt at compromise only hardened the opposing sides. What had started as a debate over banking turned into a struggle over identity. Each faction believed the other wanted to reshape the country in its own image and erase everything they valued in the process. Economic tensions pushed the nation into a state of constant unease. Northern factories expanded at breathtaking speed, creating jobs, wealth, and influence. But the very success that fueled their momentum heightened fears elsewhere. Southern planters and Western settlers saw this growth as an approaching storm. They worried that the industrial North would dictate the financial rules, leaving rural regions at the mercy of markets they couldn't control. As the economy surged in some areas and stumbled in others, frustrations intensified. Farmers faced unpredictable crop prices and crushing debt. When banks tightened credit, those far from urban centers felt the pain first and worst. They blamed distant financiers who, in their view, had no understanding of the land, the climate, or the cycles of their work. To them, central financial power wasn't just abstract, it was personal, a force that could uproot their lives with a single policy shift. Northern leaders, meanwhile, looked at the fractured banking system with growing alarm. They saw local banks failing, counterfeit notes circulating, and interstate trade slowed by endless uncertainty. To them, the nation's economic survival depended on aligning all regions under a single, reliable structure. They believed fragmentation was a luxury the country could no longer afford. These opposing visions collided in Congress with increasing ferocity. Speeches turned bitter. Debates stretched late into the night. Legislators accused one another of greed, ignorance, or betrayal. Plans for reform were proposed and rejected so many times that hope of consensus faded. Every attempt to create unity only revealed how deeply the nation was split. Public sentiment turned volatile. Crowds gathered outside capitals, carrying petitions and shouting grievances. Newspapers fed the frenzy with bold headlines and passionate editorials. Some claimed a centralized banking system would save the country. Others warned it would destroy it. The coverage inflamed emotions, turning financial disagreements into existential fears. The distrust spread beyond politics. Merchants hesitated before accepting notes from unfamiliar banks. Travelers carried gold or bartered to avoid dealing with questionable currency. Even in booming cities, anxiety lurked beneath every transaction. People were no longer just managing money. They were navigating a system on the brink of collapse. The emotional tension reached its peak when a wave of bank failures swept across several states. Panicked depositors rushed to withdraw what they could. Politicians blamed one another for ignoring warning signs, and the possibility that the entire financial network might unravel pushed the nation toward a breaking point. It became painfully clear that the conflict wasn't simply about dollars, banks, or policy. It was about trust in one another, trust in institutions, trust that the nation could function as a single economic body. That trust was fading fast. And everyone sensed the same truth. A decisive moment was approaching, one that would force the country to choose between unity and division, stability and independence, the future and the familiar. And whatever choice it made would change the nation forever. The climax unfolded in a way no one could ignore. After years of tension, debate, and rising distrust, the nation finally reached a moment where the question could no longer be delayed. The financial divide had become too wide, the stakes too large, the consequences too dangerous. A decision had to be made, and it came with a clarity that felt both sudden and inevitable. Leaders gathered to deliver the final verdict. The country would move toward a unified financial system. It was a choice driven not by consensus, but by necessity. The chaos of competing currencies, unstable banks, and endless regional disputes had pushed the nation to the brink. Without a coordinated structure, the economy could not survive the pressures of expansion, industry, and emerging global trade. The transition did not unfold peacefully. States that valued independence felt betrayed. Some vowed to resist the changes. Others feared their economies would be reduced to shadows of the industrial North. But even as anger rose, the momentum behind the new system grew stronger. Too many banks had failed. Too many families had suffered under instability. Too many businesses had collapsed. The nation could no longer afford division. And so, the shift began. Step by step, the old world of scattered notes and regional autonomy faded. Standards were introduced. Oversight expanded. The financial arteries of the country began to align. For the first time, America started moving toward a system where money meant the same thing from one border to the next. In the aftermath, the country displayed a complicated mix of relief and resentment. Some celebrated, convinced the nation had chosen stability over chaos. Others mourned what they saw as the loss of local control. But no matter how people felt, one truth became undeniable. The financial identity of the United States had changed forever. The resolution carried a quiet, sobering lesson. A nation's strength depends not just on ambition, but on cohesion. Money has the power to divide, but also to unite, if shaped with intention and restraint. The shift toward uniformity laid the foundation for modern American finance, revealing that unity, though painful, can be the bridge between crisis and progress. Sometimes the smallest shift in perspective becomes the beginning of a new future.